Right. Let me get set up here. Any brave souls that will, oh, thank you, Greg.
Hey, Cliff, how are you?
Hey, good.
Good.
New background today. Where are you at today, Greg?
Oh, we're up in Truckee. My wife's Randy's right next to me. So here she is.
Oh,
Hey,
hey, Randy.
how you doing?
Awesome. I'm good. Wow, that looks beautiful. Looks like you have a fun week ahead of you, or however long you're gonna be there.
Yeah, we've been up
Yeah.
here for a while. We'll go back on Friday.
Yeah. Yeah, that is on my list generally in life, of just to spend more time out in nature. So how often do you get out to Truckee, Tahoe?
Often we have a vacation house up here, so probably once a month.
Wow, okay.
Yeah.
What do you two do for work, if you don't mind me asking?
So Ren is in
I'm in tech.
and I'm retired from tech.
Okay, nice. Living the good. And I'm guessing being able to work remote for the most part?
Yes. Yep.
Yeah.
Yeah. Hey, Cliff, I have a couple of questions for you that I don't know that's relevant for everybody. So do you want me to shoot you an email, or do you just want to set a quick one-on-one catch up?
Yeah, let's do that. Yeah.
Okay.
You can shoot me an email and we can set up some time. And I can also I have a Calendly link too, if you want to
Okay.
just look through that.
Oh, perfect. Yeah, I'll do that.
But if you want to, if it's a learning question, we can also just tackle them now too. But if you want to do it in private, we can always do it one-on-one. No worries.
Okay.
Any other folks brave enough to turn on their cameras today? I think we're gonna end up with a smaller group, just because I got a few folks saying that they're busy this time today. So
Hey, Cliff.
yeah. Oh, hey, Jason.
Hello.
Out in nature too. Oh, wow. I love that folks are.
With this guy.
Oh, that's some dedication to some real estate knowledge. Out on a walk with your dog. And hopping on.
It's my daily routine, so the timing is actually perfect.
Oh yeah. For those in the Bay, it's feeling. Oh yeah. Go ahead, Brent.
I was just gonna say, I have a question for Andrew. Andrew, are you Melissa's brother?
I am, yeah.
Melissa's a good friend of mine. This is how I got introduced to Cliff. We work together. I work at Zendesk.
Oh, okay.
Yeah.
Gotcha. Nice.
Yeah, it's good to meet you.
Yeah, it's good to meet you
Lots
too.
about you.
Oh, thank you. Hopefully good things. Hopefully good.
All
things.
good, all good.
Oh, good to see you, Andrew. I feel like I haven't seen you in a very long time. I'm sure
It's
we've
been
met
a
over-
while, Cliff. Yeah. Thanks for hosting this, by the way.
Yeah, thanks for joining.
Of course.
Cool. And actually, that's funny. Ren and Greg, I was wondering what the connection was to the class. I'm glad you answered that.
Where we
Where's
came
Melissa?
from, huh?
Yeah.
I keep meaning to tell you that, and I have missed the last couple of weeks.
And we'll
So
be sharing it with others for your next session, whether it's in November or December. I've got a couple friends who are interested.
Oh, cool. Thanks. And that'd mean a lot. So, okay. All right. So let's get started here. Looks like if anyone else is willing to show their faces, always much appreciated. Okay. So today is class 4. We're going to be talking about mindset. Kind of a weird topic, I guess, if you're trying to learn about real estate investing, but I thought really relevant. And to set the stage a little bit, I've been on my own personal growth journey over the last few years, largely focused on real estate, but just like starting up a business and those types of things. And this is me trying to condense some of those learnings in what we can in a 40-minute class and doing some Q&A with folks. But my intent with this topic today is hopefully maybe it sparks some curiosity in folks, similar to all the other stuff that we're talking about real estate. And maybe it sparks you on this journey too, that I've found so much fulfillment and kind of joy over the last few years. And then we're also going to talk about LP investing, more actually just other types of real estate, because this class has just been so focused on residential long-term buy and hold, which is kind of what I've been doing over the last few years. But know that there are so many other types of real estate investing out there. And just as a caveat, so there's going to be talk about some woo-woo stuff on this call. There's going to be talk a little bit about I don't know, money that I've spent on coaching and those types of things. Again, the intent is not to, I don't know. Yeah, I think you all kind of understand my vibe up until at this point. It's just the intent is to share and hopefully there's some learnings across the board. So some of you might know this guy. His name's Tony Robbins. Some people think he's kind of a, I don't know, crazy guy out there, motivational speaker, but I've attended a couple of his events and they've been really, really powerful. This quote in particular, I thought was a really good one. So it's, long ago, I realized that success leaves clues and that people who produce outstanding results do specific things to create those results. I believe that if I precisely duplicated the actions of others, I could reproduce the same quality of results that they had. The main takeaway from this slide is really this thought of success leaves clues. Like Tony Robbins talks about that a lot. Success leaves clues. And the gist of it is really that if someone else is seeing results that you're not seeing, it's very likely that they're doing something different than you. You know, their approach to preparing for a meeting, the way that they talk to a manager, the way they think about real estate investing, likely a different mindset that they have, and their approach being different if they're seeing different results than you. And for me, this was particularly insightful for real estate because, and I've talked about this, I think, over the last few classes, there's really no rocket science behind what we're doing in real estate. It's a tried and true industry. For better or worse, there's not much innovation really happening. It is, if you run the numbers, you understand how the math works with real estate investing, you believe that asset values go up over time, you should do pretty well in real estate, right? As long as you're kind of being prudent on the purchase. But it's really thinking about how are other people scaling up and being more successful in real estate because they're likely leaving clues. And so, yeah, for me, part of that journey was, and I'll get into this in subsequent slides, of kind of like changing my mindset around attending conferences, being around people that have found that success in real estate and thinking about how can I almost mimic and copy them. I just wanted to kind of have a quick little segue because related to success leaves clues, for those of you who are big into the NFL or know about Tom Brady. Like I love sports because I've just gleaned so many insights over the years through sports and learned so much through sports. But for those of you who don't know who Tom Brady is, so he is the best quarterback of all time. He's won 7 Super Bowls. But I think oftentimes people don't dig into how that success happened, right? These are just some articles that I pulled earlier today of, you know, Tom Brady's contract over the years. He's underpaid. He even this past year, he restructured his contract to create some more cap space. And then this chart right here is from 2021 of like the top 10 paid quarterbacks that year. Tom Brady doesn't even make that list. And I think a lot of people see Tom Brady's success and there's question marks of like, how did he achieve it? But again, success leaves clues. Like this story that I heard about Tom Brady, and I'm sure it's more complicated than this, but during his career, he opted usually to take about 60% of the salary that he could take. And he instructed the coaching staff to allocate some of that extra 40% to recruiting good backup offensive linemen. And a lot of people were like, what's the point of having a good secondary offensive lineman backup? And his thought process was, inevitably, as the season kind of goes on, games 14, 15, as you're getting closer to the playoffs, usually one of your best offensive linemen gets injured, and then you head into the playoffs and the other team knows that, and they're just attacking that the backup offensive lineman who's not good because you didn't have enough money to bring in a good one. And I just thought that was really insightful, that like all of these quarterbacks in terms of talent, right? I think a lot of people here on this top 10 list probably arguably have more talent than Tom Brady, but they don't have that success that he's had because they're doing something different. So I just thought that was kind of an interesting thing because I think it also, you know, applies to sports and real estate, as we'll talk about in our class today. So let's talk a little bit about mindset and community. So one game changer for me was back in, it was probably 2016 or 17, but I attended a real estate conference. It was Rod Khleif's multifamily boot camp. I remember paying $300. I flew down to LA going to this boot camp. And at the time, I just thought, what a crazy thing to pay, because all of these things I'm sure you could get into YouTube or you could go to a library to get a book. Why would you pay? and going there and being around all these folks who were starting to get into real estate investing, or some folks who were really successful, was really eye-opening to me. And just as a side note, like that conference paid for itself because I got connected to a real estate CPA who, just by them working on my tax returns and showing me some tax strategy, paid for that conference plus the flight cost, like, multiple times over. But also there's this factor that I realized of sometimes you got to pay a little bit to have some skin in the game, because then everyone in that community starts to take it a little bit more seriously as well. So that's kind of what started me on this real estate journey. And the next step was this piece here of like building a community around, or joining a community of like-minded folks. So most recently in last year, I joined something called GoBundance. It's not specific about real estate investing, but there are a lot of real estate investors in that program, and something that you could just kind of Google and learn about. That thing, that organization, believe it or not, is like $10,000 a year to just be a member of GoBundance. Again, why would, like me 3-4 years ago, the thought of paying such an extraordinary ticket cost to join like a group like that seemed loony, right? But I think I'm reminded of that quote of, hey, if you want to, have a six-pack, right, or lose weight, hang out with 5 other people who are really into fitness. If you want to be a multimillionaire, hang around 5 other people who are multimillionaire, because there's usually success leaves clues. They're doing something different. And a large part of me joining GoBundance has been opening up that mindset of realizing that, hey, once you have kind of the fundamentals of understanding about real estate investing, being able to do, I don't know, a 10-unit property, a 20-unit property, then really what's holding you back from doing a 50 or even 100-unit project is really your mindset. And seeing a lot of these other real estate investors in GoBundance and in these other communities has really just given me a lot of confidence. A lot of it is like, hey, knowing that they can do it, then I can do it too. And then this other piece, I've talked about Sweaty Startup and this Facebook community. That's another great resource as well. I think I paid $300 a year to be part of this Facebook group. Crazy again, right? To pay to be part of this Facebook group, but there's just so many good insights that come out from that group. Hey, what are lenders saying right now? How do you underwrite these types of deals? So it's well worth it oftentimes to be part of these communities if there's takeaways and learnings from it. And then also related to that is coaching. I think early on, kind of in my real estate agent career and also with real estate investing, there's a lot of imposter syndrome that I was dealing with. How can I compete with these folks in this arena? And just having a coach kind of by my side, talking to you every week, working through mindset and just expanding your mind effectively, has really been kind of a game changer for me. And having just that person in your corner to support you. Funny enough, the first class that I ran, maybe earlier this year, February or March, Brody, my coach, was actually on the calls and really giving me support. And it was just a really, really cool thing to have each week. And then kind of the last point here is like community and being around those people really trumps what you can learn on YouTube by yourself. And also just kind of food for thought, the best of the best athletes, right? You can call it Tom Brady, Tiger Woods, Steph Curry, they all have coaches as well, right? You'd expect that they would know what to do. And oftentimes it's not more about the knowledge, it's actually the accountability and someone kind of seeing other things that you might not see. And oftentimes being part of a community like this or having a coach by your side can really help unlock that for you kind of going forward. Another thing too, that was kind of a big shift for me in mindset was thinking about like loss not being a loss. I know that sounds kind of crazy to some folks on the call, but really, like if you change your perspective and you think even if you lose on something and maybe lose some money, it's all growth. It's all an opportunity for you to readjust going forward and learn from that opportunity. And I think that also pushed aside a lot of the fear that I just had innately about being a real estate investor. And then this last point about identity shift, this one I put in all caps because it really is, I think, the most important piece here, which is, and this is kind of a little bit of a chicken and egg situation, but for you to become a real estate investor and do these larger projects, you really have to believe that you are someone who is capable of doing these projects. I know that sounds so straightforward and probably simple, but if you don't think that you can, it's like that quote, if you don't think you can do it, then likely you're not able to do it. And so who do you see yourself as, and do you actually believe that you can do it? It's kind of a side story, but kind of related. I remember hearing this kind of anecdote from Jim Rohn, and he was, for context, Tony Robbins' coach back in the day. And this was kind of an eye-opening story that he shared, which is the concept of tipping, right? I think I grew up in an environment where, the only way to really make money was to save more money. So don't tip too much. Make sure you kind of keep, keep your purse strings tight and don't give away too much, especially when it comes to tipping. But Jim shared this story that was really interesting, where it's like, could tipping actually make you more money? And his anecdote is like, imagine, you go to the restaurant, you tip a little bit extra. And because of that, you're at breakfast and you start to see yourself as a more generous person. Maybe you have a little pep in your step that day, right? And then you go to work, and at work, you're a little bit more energized, and your boss comes up to you and says, oh, hey, I see that you have a little bit more energy today. Do you want to present at the all hands meeting? And then you present at the all hands meeting. And because of that presentation at the all hands meeting, the CEO notices that you're a good presenter and kind of clues you in on this other project. And then now you're starting to work on this other project that might not have ever come to fruition if you hadn't started that extra tip earlier that day. I know it sounds like really wacky, really woo-woo stuff that we're talking about, but I think these kind of changes in mindset and kind of how you think about energy in your life and direction is really important, when it comes to the investing side. And then this last piece of like, what baggage and trauma do we come to the table when it comes to investing, and how do we think about money? This might be another pretty silly anecdote, but I have a friend from high school. Actually, I've known him since middle school. And believe it or not, he won't take out a credit card, like at all, and, this was something that I just found out a few years ago, and we kind of talked about it. And the backstory to it was it's very unfortunate, but his family early on, when he was younger, ran into some issues financially because of credit card debt. So he kind of vowed to just never take out a credit card ever again. And I think some of you might on this call feel like that's kind of a silly story, right? Like a lot of us have the Chase Sapphire Preferred. We know that you can get points, and if you manage your debt, you manage your credit card, it's only beneficial to you, right? Maybe you got a free flight from opening up a credit card, multiple credit cards, etc. And I guess what I'm trying to convey is we're all on that spectrum somewhere. Because I think some people on this call, might think a mortgage is super risky, and that type of debt is really bad, no matter what. Don't over lever, right? Which we've talked about. It can cut both ways. It can really hurt you in some cases if you're not really being prudent about it. But I guess with that credit card example, I'm just trying to, illustrate that we're all on the spectrum somewhere, right? At these real estate conferences that I go to, some folks are okay with having much more debt, right? As long as it's fixed rate, lower interest rate, those types of things. And just knowing that, maybe we can change our mindset around debt and use it as a wealth building tool. It's not all negative, always negative. Similar to a credit card, not always negative. If used in the right way, it can be a powerful tool for us as well. A few quotes that I wanted to share that have really kind of stuck with me over the last few years. This first one, your net worth will rarely grow more quickly than your personal growth. When I internalized that and really took that to heart, I feel like that's when I started to see more increases in my net worth and just investing, and all of those things.
Too deep for me.
Because if you think about it, even if you're working your job, right, oftentimes you don't get that promotion until you develop that certain skill set, right? Now you're capable of managing a team of 10, so then you're handed a team of 10 to manage. And with that team of 10, you now have a higher, your paycheck increases, you might get some more equity in your company, all of those good things come. So your net worth usually goes hand in hand with your personal growth. So to me, the question has become, how can I more quickly grow on the personal side? Because that means then you're able to take on more. You're able to invest more. You're able to do more and effectively grow your net worth. This next quote came from the first Go Abundance conference that I went to. Someone, I was asking someone because I don't know about you, maybe some of you who work in finance, this isn't a big deal, but for me, going to that conference was really eye-opening because it was my first time being around folks that were 9-figure net worth. To give you a sense, like 9-figure, like 100 million plus net worth, 8 figures, 10 million plus 7-figure, you're a millionaire. And, sitting kind of shoulder to shoulder with some folks who are 9-figure net worth and asking them, like, what do you think makes the difference between the 9-figure folks versus the 8-figure versus 7-figure? And the person I was chatting with said, I promise you, if everyone in this room went bankrupt the next day, the 9-figure folks would pick up more quickly than the 8-figure, than 7-figure, and asked them why. And he said, it's because they have a bias for action. The fear is still there. People are afraid to invest in a down market. Of course, they're afraid to take that first step. But generally speaking, if folks are self-made and they've made that wealth over time, they have a stronger bias for action. They kind of push aside those fears and still kind of move forward. They figure out a way to keep going. This next one is a Jesse Itzler quote. He is the husband to the Spanx founder, and he also wrote a couple good books as well, best-selling books. But he said, extraordinary life requires extraordinary action. And it's just funny because I think everyone on this call, if you asked, hey, do you want an extraordinary life? Everyone's like, oh yeah, I definitely do. But not realizing that means we have to take extraordinary action as well. We need to do more than just the normal amount of action, right, to get there. This next quote, kind of what if everything you thought could go wrong didn't go wrong? That was a really powerful exercise that my coach and I worked on for a few months. The background to this is I am someone who's overly analytical, sometimes analysis paralysis, and I don't want to take that next step, afraid of making a mistake, or just always thinking what could go wrong, worst case scenario thinking. And we tracked everything. Even the most mundane, the most silly examples of, should I park in this spot, or is there going to be a better one down the road? Or, hey, should I get the chicken salad or should I get the burger today? And just kind of always like having that feeling in my stomach of like, am I making the right decision? We tracked it for a month. And it was really interesting to see, like, objectively, I don't think picking left or right in almost all of those cases, it didn't really matter. And really just understanding that maybe a lot of these kind of micro decisions that we make in life hold us back, but really don't make much of an impact, and just freeing ourselves from those decisions. And also going back to what we chatted about in the last slide of like, even if you make a mistake, shifting your mindset that maybe there is no such thing as a mistake or a failure. It's just a learning opportunity. And then this last one, you can't out earn your financial mindset. Really comes down to how much do you think you can earn? How much do you think you deserve? There have been studies out there, that show one of the strongest determinations of how much someone makes in their career is often guided by what their parents did as a career. For example, if both of your parents were professionals, both doctors, and kind of the expectation or the norm in your household was to make $1 million a year, in general, those children end up making more money. Versus if you grew up lower income or in poverty, you kind of have this mental ceiling of what you think you can earn. Again, comes into real estate investing as well, of like, if you think you can earn $1 million, it's possible. It really is. But if you don't think you can, then oftentimes you're going to be holding yourself back. I just wanted to quickly revisit this slide of just my real estate journey, because this is kind of like 2016, 2017 is really when I started to just get addicted to real estate and trying to learn and absorb all these things. And closer to 2019 is when I started coaching and kind of going through, going to those conferences and everything. The main point that I wanted to just share with folks here is like, if I can do it and get to a portfolio of 70 units, truly anyone on this call can do it. I see this, it's a funny mix because most of you at this point, this is the third time I've hosted this class, don't know me personally. So it's just like a person on the internet telling you, if I can do it, you can do it. But for the few of you who do know me back from college and even before that, you know that I'm not anyone different, anyone special. I've partied with all of you. Like it really is a journey that I truly believe like anyone can do as long as you kind of put your mind to it. It doesn't take a rocket scientist, and that's why I'm so excited actually to share about real estate investing with folks, because and I think the quote that I shared in one of the classes, like it's the industry that has the most dumb millionaires out there. Because really, if you just buy smart and run the numbers, you can do okay. And coincidentally, a few years ago, I took, it was an online certification class that Harvard had that talked about real estate investing and kind of analysis and everything. Recommend folks to check that out too, if you really want to kind of learn how to run the numbers. But funny enough, today, I was on our Facebook group and someone from my class just a few years ago posted, and I remember him being in the class, nothing special as well. And his update after 3 years was talking about how he's grown his portfolio to 150 units. He's expanded to these markets. And I just thought that was really timely that today we're having this class. And I saw that post earlier today of just like, wow, this person has kind of transformed their lives, his life in the last 3 years through real estate investing. So let's talk a little bit about other types of real estate, because my kind of expertise has really just been on one path, just long-term buy and hold rentals. But I also wanted folks to be aware there's a lot of other opportunities out there in real estate. And my guidance generally has been what excites you is probably the path that you want to go down. Because in one of the classes we talked about, there will be hurdles, there will be things that you run into, walls that you run into. How do you get through those? Well, you need to have not only the gumption to want to get through it, but also the mindset and willingness, right? And the energy too. So short-term rentals, STRs, that's always an option. And generally folks are on cash return looking for 25 to 30%. Joshua Tree, Smoky Mountains, those areas are considered, I don't know, the hot areas that a lot of people are talking about. And funny enough, Wendy in this class messaged me the other day and was sharing about her experience, and it sounds like she's built up a pretty cool portfolio with her significant other in short-term rentals. Hotels, if you're bullish on travel, and hotels are generally much more operations heavy as well. So the folks that I know who have been successful with hotels are actually great people managers as well, because there's this huge operations component of running a hotel in addition to the marketing and all that. So I think a good way to summarize, more variability in terms of your returns, but you can do really, really well if you have an edge in those categories. Self-storage, that one has been really, really kind of in vogue lately because people tend to consider it a little bit more recession resistant. The investment hypothesis with self-storage is people tend to just have more stuff over time. If you think about your life as you have kids and all that, usually you don't end up having less stuff over the years, you have more stuff and people end up hoarding a little bit more. And then there's a high level of stickiness. So there's usually a promotion, first month free. And then before you know it, right, they just say, oh, low monthly cost of $100 or $75 a month. And every month people go, instead of clearing out the self-storage facility, I'll just keep paying for that. So turnover is generally pretty low for self-storage. Mobile home parks, that one is really, really interesting. I'm not going to do a good job of explaining it. I would say if that one interests you, I'd recommend checking out. There's a great Stephen Colbert segment on how predatory this mobile home parks can be, but from the investor angle, right, how lucrative it can be. The long short of it is mobile home parks effectively are, unlike real estate, don't appreciate, they usually depreciate. And so folks end up just having to stay in those mobile home parks for years, right? Because their biggest investment in life is depreciating versus appreciating. Commercial, we talked about this in one of the Q&As for this class, but most commercial is what's called NNN or triple net. And that means it's net of taxes, net of insurance, and net of common area maintenance. And generally what that means is the amount that the landlord gets is kind of net of everything. What you get in the mailbox or wired into you, that's kind of yours to keep, because the tenant is responsible for all the other upkeep items. So that might apply to like industrial, office and retail, medical space. New development, in other words, like building new apartment buildings, building new townhomes, building any of these facilities is brand new. Just know that new development normally sells at a premium, but it's considered higher risk, right? But you also get higher reward. And then we won't have time to kind of dig into these, but good ones for folks to maybe research a little bit. There's something called an opportunity zone. And those are some tax benefits if you invest in an opportunity zone. Fix and flip. I think that's for folks, not faint of heart, right? Being a little bit more courageous. Similar to new development, I think there's just more risk with fix and flip, but higher potential reward. And then on the other end of the spectrum, if you still want to be involved in real estate, but take on less risk, you can invest in what's called a debt fund, or you can actually be the lender on a project. So effectively your recourse if things go south is you get the property. But in the meantime, you kind of get fixed payments from the developer. And usually those returns are anywhere from maybe 8 to 12%. And you're effectively playing the bank. I wanted to chat a little bit about limited partner investing. So with any of these things that we talked about, like short-term rentals, hotels, and all of that, even long-term buy and hold rentals, there's usually something called like a syndication that folks are putting together. And that's like I shared after class 2, an example of a syndication. The caveat with a syndication is you need to be careful with who you're investing with, right? Unlike investing in Apple stock where there's auditors and the company is public and there's certain regulations, with these syndications, they are a little bit of a black box, right? So kind of that person's track record and history. Ideally, you're investing in a project that you know of someone who has invested with that person before, because that's going to be important. But with those kind of risks in mind, I've personally gravitated more towards limited partner investing over the last year or so. I've shared about the idea of time ROI and just being able to think about like I'm okay giving up some return to get all of my time back in anticipation of starting a family and those types of things. And if you have any questions, right, if you see a offering memorandum or a project come by and you want a second opinion, feel free to send it over. I'm always willing to kind of take a look and give you my thoughts. But it is an easy way to get exposure to other real estate asset classes or just real estate in general, if you want to have that exposure. And then the final point here is like, if all of that sounds a little bit too difficult, right, then you can always just invest in a REIT stock as well. A REIT stock is as easy as buying Apple stock. You go to your brokerage, you type in the ticker, and then you put in X amount of shares and the order executes. I've talked a lot about goals and pushing stuff on you all in terms of like taking that first step. What is that next brick? How can you kind of move on with your real estate journey? So I thought it would make sense for me to also share my goals with you all for the accountability piece, but also just so kind of what I'm thinking about with real estate. My goals kind of in the near term, these kind of bullet points highlight that. I'm trying to get to 100 units, either single family home or multifamily. I'd be good with either of that. I am doing more LP investing. I think there's the aspect of getting exposure and diversifying, but also I found it's a nice way to learn as well, because if you invest with a good operator, oftentimes they'll kind of take you under their wing and it'll be an educational process as well. For example, if you invest like in a hotel fund, fair game for you to ask that operator, how are you thinking about investing in hotels? What are the common loan terms that you're getting? How do you select your markets? All of those things. So you kind of can build up your knowledge base while also investing in that industry as well. Personally, we're trying to get to $20,000 a month in real estate cash flow over the next few years. And then I kind of put this one in stars, continue the journey with my wife, because I think related to what I shared about kind of personal growth and coaching and joining GoBundance, that for me has been really, really cool and special, is just having my wife. It's evolved from me 3 years ago, kind of managing all of our finances and leading the charge, so to speak, to, over the last couple of years, more questions, more conversations, talking about finances as a household that have been really, really neat. This, for example, this whiteboard back here, this isn't just for show. It's actually my wife and I, for the first time, did a whiteboarding session, envisioning for ourselves. This was maybe about a month ago. So we had different topics there, like work and career, finances, health and fitness, personal growth, kids, physical environment, travel, fun, intimate relationship, and social, and all of that. And that has been really, really special to me as well, because as much as I've wanted to grow personally, right, having my wife along with this journey has just made that so much more special. And then the last piece is the goal is really to teach this class to 500 students or attendees. And yeah, maybe that's a good segue just to kind of the next slide, which is if any of you, I really appreciate all of you joining this class, getting to meet some of you and those of you who kind of book time on Calendly and just chatting with you about real estate. It's been really, really cool and really special. So I hope you all have enjoyed the books that I sent out. And really, if you know anyone who might benefit from taking this class, again, there's no way for us to cover every single topic related to real estate, but if you found these topics to generally just be helpful, I really appreciate your referrals. You can make an email intro, you can have them fill out the questionnaire, and I'll send those out in the next class or in the next email as well. All right, so maybe we can transition to a little bit of Q&A while I just look at my notes to make sure I didn't forget anything. The last few things that I wanted to share. So don't mistake doing research and looking at Redfin and doing all those things from taking action. Like this, again, going back to success leaves clues. One really big turning point for me in my real estate investing career was learning that some of the most successful real estate investors are submitting 3 to 5 offers per week. My mind was blown when I heard that. But then I realized what they were thinking about it was it's a numbers game, right? If you submit 3 offers a week, that ends up being called 150 a year. Sounds crazy, like a crazy number. Maybe you could build a process. You could figure out how to get that done, right? If you have a team or start to build out your team. But then you're really taking action, right? Because then you're forced to really analyze the numbers and really think about the next steps and all of those things. Versus I think people start to go down the rabbit hole and maybe they're just looking at a research report and they think that they've taken action, but that's not really kind of getting to the nuts and bolts of how to start to build your real estate portfolio. For example, picking up the phone, calling an agent, talking to a lender, submitting an offer, underwriting a deal. I would consider all those action versus surfing Redfin for 20 minutes. It's quasi-action, but it's not really getting you closer to your goal.
But what if all 3 of the offers get accepted?
That's a great question. Then I would say you're probably in a pretty good spot because then you can negotiate really hard and you can figure out which one's the best one. Or if all 3 are amazing and really good and you're wanting to figure out how to close on all 3, that's going to take you to the next level of real estate investing, which is, this might sound crazy and scary, but you might need to start to share about real estate investing with friends and family, potentially raise some capital and learn about what it's like to be a syndicator on your own and start to learn about operating agreements, how to put a deal together, how to present it to folks and convince them that it's a good project. I think there's a common saying on the investing side, which is like, you don't need to worry about having too many good deals. Like once you find a good deal, all the other pieces usually are pretty easy to connect the dots. Namely, like if you need to find a lender, should be pretty easy, right? If the deal is good enough. If you need to raise capital from other folks, if it's a good enough deal, you can post it to a real estate investor community, and I'm pretty sure that people would commit capital to if the deal is good enough. So again, I would say maybe that question also reminded me a little bit about what we're talking about here about mindset, right? If the fear of submitting 3 offers is that all 3 are going to get accepted and you're going to be in a tough situation, you got to flip that around. Try submitting 3 offers. Very unlikely first that all 3 will be accepted. And also it might be a learning moment of like, maybe I actually need, the market's shifting more quickly than I anticipated in my model, and I actually need to be more aggressive with my initial offer price. Still learnings regardless, I'd say.
Okay, thank you.
Yeah, good question, Helen. Thank you for always chiming in with thoughts and questions.
Thanks.
Yeah, any questions or thoughts from folks? If not, I did have a couple of slides that I wanted to share with folks. I saved these for the Q&A and kind of the end intentionally because, there's a lot of kind of doom and gloom right now on top of mind for folks, right? Interest rates are rising, stock markets at 52-week lows for a lot of stocks. So I wanted to save this for last after we talked about mindset and the positivity and all those things that folks needed to shift around to build your real estate portfolio. But I also didn't want to ignore there's a lot of shiz happening right now in the world, right? And at any time, I think there's a lot of stuff happening in the world, don't get me wrong, but like in particularly now, I think more so than the average. I'll walk you through kind of the stuff that I pulled here, right? And again, the message here is the market is shifting. I personally think that there are going to be more opportunities than if you pulled the trigger on something now. I think prices will likely come down from where they are. But even before we dive into this, I just wanted to, my message is, how are you thinking about the potential downturn and the shift in the market? Because if you've attended this class and made it through 4 classes, you're clearly really interested in real estate. I understand the nerves and I understand the hesitation, right? I'm feeling that as well. But I think the deeper question for every person to think about is, when the market turns, how will you know when it's time for you to potentially jump in? When will be your opportunity to go in? Because if you've been sitting on the sidelines for the last 2 years and the market's been going up and up and up, and I'm sure many of you have vowed, when the market goes down X amount, I will be ready. But I promise you that voice in your head that told you not to buy when it was going up is going to be even stronger when the market's going down, if it continues to go down. So I don't have answers. That's a very personal question for folks, but that's why I wanted to share these things, because there is evidence, right, that there's going to be downward pressure on prices in the near future, right? This is just from yesterday. 30-year fixed has hit 7%. Today on some of my real estate groups, I was hearing some people quote at 7.5% for a 30-year fixed loan. High, really, really high. Just so you know, just for context, though, this is for like conventional 30-year fixed. If you're here in the Bay Area or in areas where like higher purchase price, most people are getting what's called a jumbo loan. And so jumbo loan pricing is still in the 5%. So it's much higher than before, but not crazy high as 7%, just so you know. This here is a chart from end of August of year-over-year inventory in a bunch of different markets. I think I've kind of mentioned some of these, but for example, Austin is up 170% year over year. Las Vegas up 150% year over year. Phoenix up 160% year over year. I say this, right, because I think this might be a scary number for some folks to see. This is the snapshot view of right now. And I also pulled this, which is in the context of like historical, right? Zoom in, zoom out. This is probably trending. Yeah. Question.
Sorry, I just want to make sure I understand that chart. It's Greg.
Hey, Greg.
That's actual inventory that's available for sale. And so, for example, Austin, 167,000 167%. It's gone up as far as active sellers right now.
Correct. Yeah. So like this is saying, for example, at the end of August, there were 9,045 active listings. Like if you went onto Redfin and Austin Metro, that's how many you'd see across the board, versus a year ago, it was 3,400.
Gotcha. So people are bailing out there.
People are looking to sell. Yeah.
Yeah. Okay.
Inventory is spiking and it's going up and up. Again, it's not like interesting to see that not all markets, and this is what we talked about in one of the classes, it's very localized, right? Austin, I think most of you know, like flying high over the last couple of years. And I'm guessing a huge portion of those people are investors, fix and flip folks who are trying to make a quick buck. And when the market turns, now they're all trying to get out as quickly as possible. So to me, that kind of story makes sense. Like same thing with Vegas and Phoenix in the last kind of 07, 09 time period. Those were kind of the high flying markets that appreciated quickly, but also kind of dove pretty quickly as well. But it's not across the board. Like Maryland, inventory is actually down 1% year over year. Boston down 6%. Santa Clara, which is, I guess, kind of a proxy for the Bay Area, it's mostly flat for the most part. Although I think in San Francisco in particular, it's up. So just know, yeah, it's a localized kind of context here. But the other side of the coin is this chart here on the left, which is looking at nationally active inventory across the board. It's definitely going up, trending up. So you know, you hear this a lot. It's like, are we normalizing or are we headed towards, you know, I don't think it's going to be a crash, but a correction of some sort. Time will tell. I don't have a crystal ball. I actually don't really have too
Any
many solid
any
thoughts.
insights, Cliff, on what that chart might look like from a rental perspective?
Oh, good. Like rental units available.
Yeah, yeah.
This, all anecdotal, so I haven't looked at the numbers, but I think it's not as drastic as these spikes, because I
Mhm.
think rentals typically tend to trail sales or listings. So I think generally speaking, people try to sell first, and then if that doesn't pan out, then it becomes a rental.
Yeah,
Kind
great.
of depends on the market. You know, some are more rental focused, but I would think like in Austin and some of these higher price market or price points, folks try to do that first.
Thanks.
And yeah, and then again, I think like this, I think if you follow the stock market, I realize this is so negative and doom. I hope we don't end on this note. Someone plays, I'll play some happy music after this. But important, I think, context for just people to know, because I know that some people might not follow the stock market as closely. The stock market is down a good amount, right, in the last 12 months. I handpicked these stocks that are down a bit more than average, right? But know that like growth stocks, the high flyers over the last couple of years, like Zoom, Spotify, Amazon, DoorDash, they're down, right? Substantially, right? 70%, 60%, 30% year. And these are all pulled from last year, the last 12 months. So again, the message, I'm hoping to now turn this to be a more positive conversation, because really the intent was not to be doom and gloom and let's end, but it's like, hey, if there is a winter coming and things are shifting in a bad direction, right, in terms of pricing, how are you mentally preparing so that you're ready to capitalize on it? Because going back to that first class that we talked about, why do we invest in real estate? I generally believe that asset prices, real estate prices go up over time. So I'm seeing this as an opportunity. It's scary, and it comes back to mindset and all the stuff that we talked about today. But how can you kind of mentally prepare? How, you know, if the market's going down, how can you be prepared to think about buying a rental property? All right, let's go into some question. I feel like I popped the balloon of energy a little bit with that, but I'm also just trying to convey, I think from class, I've told you all that I'm bullish on real estate investing, but also I'm not someone, I like to just give both sides of the story too, and just be realistic with what I share with folks. Bentley asked, do you believe there are certain areas of real estate where bringing technology or a higher level of customer service, perhaps through tech, may have previously existed, can have more of a difference and give you an edge? That's a really good question. I personally think that really applies to short-term rentals and Airbnb. In particular, right, I know like pricing algorithms that Airbnb provides, but also I think you can pay for other services too that give you more nuance than that. You can hire virtual assistants to help you with the customer service aspect of it, so that saves you time. And also like market selection. There's a website called AirDNA that you have to pay for a monthly subscription, but they provide really, really good insights in terms of average ADR, like average daily rate, and also occupancy. So I think in combination, like those technologies can kind of give you an edge on the average person who just is like, oh, let me put up my home for sale. I mean, on Airbnb for the next month or two. And then Bentley also asked, with your focus on buy and hold residential, how often have you run into challenges of tenants not paying? I know you baked this into the model to some extent, but has this ever become more of a nightmare than you expected? The short answer is yes. Yeah, there have been. So with our 20 unit in Charlotte, when COVID hit, I think at one point we had 4 of the 20 not paying, just to give you a sense. And that got to a pretty hairy situation because we were nervous that, especially with the eviction moratoriums and all of the stuff that was being passed, that the word might spread to the other tenants that they don't need to pay. So I've heard of some investors that got to a really nasty number, 40, 50% of tenants not paying. So yeah, so again, I think that's kind of more worst case scenario, right? Generally speaking, I think it's been more manageable than I expected. But depending on your portfolio size, at some point, just by the number of units that you have, you'll run into that. I would say just going in eyes wide open, expect that to happen, versus being blindsided by it. Any other questions from folks?
Speaking of this concept of like return on time, I think I'm sure a lot of us on this call, I mean, we have a day job potentially. So, as you're building out this portfolio, I mean, how many hours do you think you allocate or need to allocate to just say, I don't know, 1, 2, 3, and like, does it scale? Can you get economies of scale over time? Or do you just have a fixed rate that you just probably need to block out on a weekly basis? Just curious to hear your thoughts.
That's a really good question. I think it would take some time to get that economy of scale, but I would say, I think, working a full-time job and also trying to be a real estate investor on the side, I would think you probably want to allocate at least 10 hours a week, 10 to 20 hours, especially at the initial onset, as you're starting to ramp up, getting your sea legs, understanding how talking to brokers work, talking to agents work, and underwriting and running the numbers and all of those things. I think that's at a certain point, depending on how big the portfolio is, you might be able to like bring in like a manager to manage the property managers. Or if you don't want to grow the portfolio anymore at a certain point, then you can dial it back, right? And maybe it can be something where it's like 5 hours a week. The tough part for me, is it's hard for me to give you like a number because it's not consistent usually. It's not like X amount of work needs to get done every single week. It might be like 3 emails 1 week and then nothing for 2 weeks type of deal. But I would say, yeah, like maybe 10, 20 hours to get started. Then you start to understand how it works. Maybe the first year or two, that could be a good kind of expectation. And then you could dial it down really to as little as you want. It's not going to be zero for sure, just to be clear. Yeah. That's the other thing that I wanted to convey with people, that everyone thinks it's like passive income, but passive, it's actually passive with quotations.
Cool, thank you.
Yeah. Eric, I'm curious, what are your thoughts? You're one of the folks that work in finance. I know you've thought a lot about investments and all of that. And thanks for joining the class. But like, what are your thoughts on like real estate, direct investing versus buying a REIT? Or I don't know. Do you have real estate exposure in your portfolio? Or
I'm a little bit, but yeah, no, I mean, I would say, I think for me, I'm always just trying to balance this return on time aspect. And that's hence the question. And for me, I try to think about it as like, okay, what different asset classes like can I get exposure to diversify, a portfolio, and then how much time and effort needs to go into managing, said asset class. So that's kind of like where I've always personally struggled a little bit with investing in direct properties because of this potential 10 to 20 hour commitment if you're super busy. So I think that's for me, that has been the largest hurdle, I think, to building out like a very quote unquote meaningful portfolio, and just like part of my broader, I would say, structure. But yeah, that's just my own personal journey. And so I appreciate you doing this class.
Yeah, I would say, yeah, generally what I've found, and this is a big generalization, but for my friends, and you might know, like, I don't know, Davis and some of my friends who are like still work in finance. I think generally a lot of them have looked at the numbers, right? And they've kind of ascribed to the thought of like, let me just stay in my lane of like, hey, I'm making good money working in finance or in tech, and maybe I'll do some LP investing on the side. But the prospect of like building your own directly owned portfolio seems like a lot of work and might not be worth it for that incremental dollar that you get. So yeah, and funny enough, yeah, I mean, some of those are like my smartest friends too. So it's just like I hear what you're saying, because I think a lot of people think about it, but when you really get down to the nuts and bolts, they realize that real estate is not really the best path for them.
I have a question. You mentioned that you got some single family houses in Austin and that some of them you bought before seeing them, but you had the realtor look at them, the contractor look at them, the property manager look at them. How did you find these people?
Great question. So the agent that I found, I can't recall specifically with him, but his name was John Guerrera. I believe I found him through Bigger Pockets. Yeah, Bigger Pockets is a really, really good resource. I'm sure the website has developed since I started really digging into it like 6, 7 years ago. And to be honest, I haven't really been on it too much in the last year or two, but really, really great resource because you can look at specific cities and neighborhoods. So you can just do a Google search, but real estate investor, Austin, Bigger Pockets, right? And there's like a sub forum for Austin. And then you can see who's eloquent, who knows what they're talking about, who is spending time in the forums. And if they're tagged as a real estate agent, that person might be a good person to reach out to. And I would kind of build a little Rolodex of 3 to 5 people on the real estate agent side, give them a call, see who starts sending you listings, who you kind of vibe with, who seemed like someone that you can trust. And then you might have your real estate agent there. And then same thing on the property manager side. I would kind of do a cross search, looking on Yelp and Google, see who have good reviews. But the tricky thing about property managers is it's kind of like the like I think like people say like with Chinese food, right? Chinese restaurant. It's like the best Chinese restaurants have 3.5 stars. Because like the people like, it's like might not be the most clean or like, there's
Yeah.
some warts and all. So same thing with the property managers. Usually the best ones don't have the highest reviews because it's a balance. We talked about this in one of the classes of like, if they're just saying yes to every single expense that gets submitted, that's not necessarily a good property manager. So sometimes you have to dig into their reviews of like, why are they getting 1 star? Maybe it's a tenant that's like mad that XYZ wasn't fixed. But if you really think about it, maybe that shouldn't have been fixed right away, or maybe the tenant can try to change the light bulb on their own or something like that, and they got a 1-star review. So I look at Yelp and Google, and then also Bigger Pockets too. And Bigger Pockets specifically asking for folks' recommendations on property managers who they've worked with, not who they heard is a good property manager. And then, I mean, these are, I don't even know if I could say that these are tips, but like it's worked for me. Believe it or not, my property manager in Austin, who's one of the best that I work with, I found him on Reddit. There's a subreddit for real estate investing. There was someone there that was posting about owning rental properties in Austin, and he seemed really, really knowledgeable. I messaged him, and he shared the name of his property manager. And this property manager is not really, you can Google search them and you can find their website, but they weren't like highly ranked on Yelp, for example. So just like, I don't know, kind of sneaky ways of just kind of doing your due diligence, and then interviewing them and chatting with them. And then between those 2 folks, right, then you now kind of have a mini team that you can send out or ask for their opinion on things. And it becomes a little bit powerful when, and just say you have a contractor too, same thing with getting the contractor through a referral. You kind of just need to kind of explore all those avenues to try to just find how to build that team. But like, if you have all 3 of those folks aligned, that might be a good one to proceed with, right? If the real estate agent is saying, yeah, this property looks great, I think there's only $10,000 of work, the property manager stops by and says, oh yeah, I manage 6 rentals in this neighborhood, looks pretty good, I think it's probably about $12,000 worth of work. And then the contractor stops by and says, oh yeah, this home looks good, definitely no more than $15,000 worth of work. Then you might be able to triangulate from all 3 of those, like, okay, let me budget $15,000 worth of work, but unlikely it's going to be 40,000, 20,000, because they all gave their opinion.
Oh, okay.
And then
I
that's
see.
how you kind of start
Thank you.
the snowball a little bit. Yeah.
My husband and I were joking that like, oh, can we just also buy in Austin with Cliff and use his property manager, realtor, and contractor?
Oh, yeah. I'm not trying to not share the property manager. It's called Iron Rock Properties Austin. This is
We
what
had
I
a
mean
bad
by,
experience with the property manager that got recommended by the loan agent in Washington because they wrote in their contract that they increased the rent by like $200 every year. So
Wait,
Thought it would be
I
hard to
missed
keep
that.
the 10
I missed the
people.
beginning part. Can you say that again?
Oh, I was just saying that I had a bad experience with a property management team that got recommended to me by the loan agent.
Mm, that can happen too. Yeah, I'm not saying that it's like a foolproof way, if you search and get referrals, but um, and that's another thing too. Maybe someone had asked about tenant issues, right? Having to switch your property manager. I've gone through that too, and that can feel really tough in the moment. But if you're thinking about the long game of building a big real estate portfolio, do know that that will happen at some point too. And you'll run into a bad property manager, even if you did all the vetting, all that stuff as well.
Iron Rock Properties. Okay, thank you.
Yeah. So this is what so that's why I wish I could give you like concrete tips on how to find Iron Rock. They are really good. But again, look at this. Yelp, 7 reviews. I haven't been on their Yelp, so this is me like I'm nervous that I don't know what we'll uncover right now, but like their last review was in 2019, and I don't know what these reviews are going to show. But their team has been really, really good for me. So I think maybe just the way I would summarize it is it's going to take time to find folks. And if you just dig right in those communities, bigger pockets, if you do go on Reddit, watch out, it can be a black hole for your time, but there's some good subreddits. And spending some time, right, interviewing folks, I think you'll get pretty close. You might not find Iron Rock specifically, but I think you'll find at least a pretty decent property manager in your market.
Thank you.
Kind of building on this concept of maybe investing alongside you. Can you just describe what is Tenzin Capital and just a little your involvement in it? I'm just curious. Yeah, I just love to learn more.
Yeah. Tenzin Capital. What is the website? That is, what's this one right here? This is it's not anything super sophisticated or fancy. This was a few years ago. I put together an LLC, and this is primarily the LLC that I used to do LP investing, and also this entity is based in Philly. So properties that I've purchased in Philly since I created this have been under Tenzin's ownership. Yeah. So good sleuthing. I don't know how you found. Oh, maybe it's on my LinkedIn. So maybe it's not.
Yeah, it's on your LinkedIn. Didn't have to sleuth too hard.
Yeah. So yeah, this was me like really early on. I think I put this together like back in 2019, and it was just me. I don't know. I thought it'd be nice to build a website and found a logo designer and built this infographic with a marketing person, and just this was me starting to think about what did I want, like if I'm going to go into real estate investing, what are the principles, what am I going to be investing in, and funny enough, like I haven't updated this website clearly in a little bit, but like these are still things that I really believe in and hold true, right? Distressed properties in high potential markets, value add. I think that's where you can make more money, right? Instead of buying it turnkey, you kind of lose that opportunity to add value. And then understanding market dynamics. And yeah, the portfolio has grown a little bit since then, but yeah.
Cool. No, thanks for sharing.
So Cliff, actually, I'm glad you brought that up, or Eric, whoever brought that up. But at any rate, so what are your thoughts on like an umbrella LLC, then each investment property under their own LLC to kind of limit liabilities to your assets, as a personal investor? What are your thoughts on that?
Yeah, I think it's generally a good idea. I should caveat, I'm not an attorney, double check all of this.
No, I got it.
But I think it's a good idea. You just want to balance how much work you're creating for yourself as well. Because if you create a holding company and all these separate LLCs for everything, you are mitigating risk of slip and fall or some sort of litigation. But just know with every LLC, there's usually some sort of filing annual every 2 years that you need to do. In California, there's a franchise tax fee that you had to pay. So you can create all this structure that creates a lot of protection, but then you're also creating a lot of potential work for yourself too. So like I've generally, I think, as I've created more LLCs, I kind of have a threshold in my mind. It's like, okay, maybe I'll have 4 single family homes in this LLC and then I'll create another one. But I think I personally would go nuts if I LLC like every single property every time.
Sure.
Um,
And do you typically set those LLCs up in Wyoming, Delaware, or Nevada?
I should be, but I've not been. Yeah, because I know Wyoming, you can my understanding it's because then you can kind of mask your identity.
Yeah, nobody can ever find out who you are.
Yeah. But I've heard that it's true, but not true. Like a super good attorney will find you out either way. But I you know, luckily I don't know the answer because luckily I haven't been sought out by an attorney. But
Yeah, no, I appreciate it. I'll bounce it off attorney. Thanks.
but it's a good question. Yeah. And the other thing to consider, and Greg, I don't know where you kind of are on your real estate investing journey, but I think lots of times the LLC question comes up so much. Like for example, the questionnaire to join this class, that was the #1 asked question. And I just always feel that it creates so much resistance that people go into this rabbit hole of like, should I LLC or not? Is it? And my general guidance is like, just don't let that block you. You know, it's like there are benefits to owning real estate in your personal name. Because once you own it in an LLC, it has to be a commercial loan. Loan terms are less favorable, right? Instead of it being a 30-year loan, it's usually 20, 25. And also there's like the balloon payment aspect of it, of like in 5 years, that whole loan is due. So you have to refinance it. So like, and that's not really a thing. If it's a 4-unit building under your personal name, you could get a 30-year conventional loan, fixed interest rate, and it never changes for those 30 years. So it's not super black and white of like LLC being better than personal name until I think you get to a certain size of portfolio.
Makes sense. Thanks.
Good questions. Anyone else? All right. Thanks for hanging out Wednesday nights on September.
Thank you.
It's
Had
been
a really
super,
good
super
time.
cool.
Thanks.
Yeah, I really appreciate our time together. I really wish you all the best. I said this in the first class that if you, my intent with this was free guidance for folks who are interested in real estate investing. And if you need, I want to be your mentor. If you have questions about real estate, I've had, maybe 10 folks reach out to schedule time. I enjoy this stuff. I really do. So if you want to talk about real estate, let's schedule some time. I really want to make sure I've made some mistakes along the way. I just want to make sure that you're not making those same mistakes as well. I hope you enjoyed the books. Take a look through them. I really think that they're some of the best 2 real estate investing books out there. And yeah, I'd really appreciate if you have friends who might benefit from this class. I'll send out some stuff or intro them to me, tag them on the post. But if I could get to that, teaching this class to 500 people next year, that would really make my day. So yeah, thanks so much. I really appreciate the time and thanks for joining. I'll stick around too, a couple more minutes if folks want to ask a more private question as well. But
Thanks, Cliff.
have a good night.
All right.
Take
Thank
care,
you.
y'all.
Thanks, Cliff. We gotta go grab a beer sometime soon.
Yeah, let's do it. I'll hit you up. Yeah, let's do
All
it.
right, see ya.